Hello everyone, welcome to a new video for the gold price prediction based on Elliott wave analysis. Yesterday we saw for the gold, of course, a new high, which of course it took the all-time high for the gold, and we start to move and drop downward. Now, why we dropped down directly downward, and that because of course I mentioned yesterday, if you remember, that we are in a zigzag here, so we gotta be careful with it. I'm gonna dive inside it to show you and remind you about the shape of this one. So you are here in a zigzag toward the upside. You cannot call this 4, 5, by the way, interfering with zone 1 if you have an extended wave 1, 2, 3, 4, and a 5, wave 4 interfering, okay? No impulse, it's a zigzag, meaning wave 1. And I was looking for a potential wave 2 here, and then having a wave 3 toward the upside. The target for wave 3 perfectly hit. It's a perfect hit, so I'm happy with it, of course. And I took my profit over there because I didn't want to risk this, because I know that there is a zigzag here. Nothing is impulsive yet. Can turn, of course, into kind of like a diagonal where we might have here a 1, 2, 3, 4, and a 5. Now, the problem, we have a problem as well, again, with this drop. A wave 4 is very longer than wave 2, which is not nice to see. And opening the question mark here for an ending there, knowing that of course in parallel you're still in the same channel, but it is kind of invalidated as of course wave 4 longer than wave 2. Therefore, what the hell happened? I don't know. Okay guys, so basically if we are here potentially in a diagonal, it is done. Okay, it's gone, knowing that we took the target very nicely, but we drop very massively after it, which is not nice to see. And it might turn into an impulse. And that means, of course, this might turn all of it at a kind of like an A, B, and a C toward the downside, which it can be, of course, another diagonal here unfolding potentially, and even can be probably even a zigzag here for wave 1, meaning two possibilities. Whether your wave 1 is right now there and you're looking at a wave 2, right? So this is like kind of your ending diagonal 1, 2, and you're looking for 3, 4, 5, which is much more convincing, right? And in case that we are here in something like a zigzag, well, like three ways toward the upside, it's very, very, very weird, because we went very high. And that means if you are in three waves, the only possible way here to be, of course, in an A, B, and a C downwards, which is a big expanding flat, which is not possible. Wave B has overshooted so much the wave A, right? Therefore, you have a zigzag here, and probably here a correction, and very clear that you have another zigzag over there. Now, can I read this internally as an impulse, correction impulse? Probably yes, if you want to take maybe your impulses over there and everything else is simply just corrective and unfolding kind of like a zigzag internally, yes, because this is the only possible way right now that we can read this as, of course, as a zigzag. And everything else here, even this one, this part of this correction is a correction simply. And your only impulse is unfolding from there, internally, of course. Okay? And that means you have impulse, correction, W, X, and Y, impulse. Okay? You got your zigzag, you got a wave 2, and then you move a wave 3 towards the upside. Now, what you would like to see for higher prices is simply invalidation of bearish. Okay? Because if you are impulsive here, 1, 2, 3, 4, 5, you want first of all to invalidate this as 3,419. So yes, basically now we are bearish. We gotta be careful, guys. We took the all-time high, and I'm gonna explain why. And the direction of the market is downward, so we gotta be careful until invalidation. If we took invalidation, I might open higher possibility again for a 1, 2, 3, 4, and a 5. Okay, so this is a bullish scenario. Now, why we might drop down? Let me move a little bit out of the box. Daily. Let's open the scenario. Currently, you are in a 1, 2, 3 wave 4, right? You are in a 1, 2, 1, 2, 3, 4, 5 for wave 3. Currently, this is your wave 4. Wave 4, as alternation for wave 2, you need at least the 0.23 fib level, not hit. Regarding the timing, you did not hit even the 1-to-1 fib time, which is the most common, and preferably after the 1-to-1 fib time to finish a wave 4, which we did not yet finish it. As you can see, the price action is behind the 1-to-1 fib time. Meaning, in a very rare case scenario, when you have a triangle not hitting the fib time, not hitting the fib levels, you might be here in a correction ABC or a WX and a Y. Now, many of you wrote me in the comments, maybe I get someone else, you cannot have W as a triangle. You can have a W as a triangle. There is no rules, okay, about this. You can have a WX and a Y. The same for AB and a C. The only difference that you might have is a zigzag or an impulse in a wave C or a wave Y. And I'm going to keep both because we got to have to remember in a case scenario where you might have, of course, a zigzag. Okay. And I'm going to keep it. Even if it is a rare case scenario, I'm going to keep it. Okay. It's a rare case, but I'm going to have it and I'm going to estimate it because I don't pass any kind of scenarios. All right. And the difference is that I will be ready in case we get a zigzag and we move towards the upside, whether you are just convinced with a wave C as an ABC because triangle cannot be a W. Okay, so then you get, of course, if you're waiting for wave 5, you might get a reversal before you get your wave 5. You miss your trade. Very simple. Okay, so that's why I keep it there. And I study every possibility. So please don't tell me that W cannot be a triangle. And it can be, of course. And of course, we might be in a WX and a Y or AB and a C. Now, currently, if we dive deeper, we see, of course, an ABC towards the upside. Wave C, probably not finished. It can be, of course, double 1, 2, 3, 4, 5, 4, 5. Or you're finishing here as the ending diagonal that I just showed. If this ending diagonal is gonna finish over there, we have to be very careful because you're finishing an ABC zigzag in the blue box, which is 1.05. A perfect fib levels also for an A, B, and a C downward. And I'm still so much convinced with this scenario because, as I mentioned, targets and fib time are not hit for wave 4. Yep, so let's watch what's going to happen. And I believe that the drop down for the gold might be, of course, very close after you finish there. And the signal for it is already given in the lower time frame. You start to see zigzags here, okay? You start to see zigzags and you start to see some weird shapes. Plus, the direction of the market right now is bearish because you might be in an impulse on the 15-minute chart until invalidation at 3,419. If the price stays below this, we are bearish, guys. So we gotta be careful. That was it for the gold. Thank you for watching. Thank you for your likes and comments. See you in the next one. Bye-bye.